Hi everyone. In this video, we're going to talk about the Relative Strength Index (RSI) indicator. The RSI is one of the most popular indicators in technical analysis, and it can be used to identify overbought and oversold conditions in the market. I'm going to show you how to use the RSI indicator in a different way than you've probably seen it used before. I'm going to use a different setting for the RSI that I've found to be more effective. Before we get started, I want to encourage you to subscribe to my channel if you haven't already. I post new videos every week, and I would love to have you join me on this journey. Also, please like and comment on this video. Your feedback helps me to improve my content. Now, let's get started with the RSI indicator. Let's pay attention to the price action in our first example. Even though the market is in a sideways trend, the peak levels are slowly falling while the bottom levels are also falling. With the closing below the previous bottom level, we see that the selling pressure in the market is increasing. Additionally, the RSI line is still within the black area. We expect the RSI line to support the breakout actions of the price. After a short while, we see that the RSI line also falls below the black area with the closing of the strong red candle. Now the dominance of the selling group is noticeable, and we think that a possible strong selling wave will form. A short position with a 1-to risk-reward ratio would be a logical move. Let's see how it plays out. The trade reached its target perfectly. Let's do a short analysis at this point. After entering the trade, we see that the price reaches a new peak and enters the loss zone, but it could not close above the line we marked as a downward character change (CHACH) in the market before entering the trade. If there had been such a high close, it would have been a different option to close the trade by accepting a minimum loss in that area. It is useful to keep this information in mind as well. Now let's look at another example. Before we move on to the next example, let's take a quick look at how the RSI indicator is used in this strategy. I've marked the black area on my chart in a way that makes it easy to see. As long as the RSI line stays within the black area, the market is in a state of indecision. This means that there is no clear trend, and both buyers and sellers are equally strong. Therefore, it is risky to enter a trade in either direction until the RSI line leaves the black area. This is because the market is likely to consolidate, or even reverse, once the line leaves the area. Let's take a look at the new example now. We see that the resistance line we drew has been broken upwards with a false breakout. Here, the formation of a bull trap is noticeable. After this upward movement, the price falls back below the resistance line, and the novice investor who opened a trade in a hurry is stopped out. The main purpose is to break the small investor's transactions and easily move the price in the direction desired by the market maker. The main purpose of a bull trap is to lure inexperienced investors into buying a security at a higher price. Once the trap is sprung, the market maker can then sell the security at a profit. To avoid falling victim to a bull trap, it is important to be aware of the signs. If you see a false breakout of a resistance line, it is best to wait for confirmation before entering a trade. When we look back at our trade, we see that the price quickly reversed to the downside after the bull trap. It also fell below the recent low. After analyzing the price action, we can now conclude that opening a short position is a logical move because the RSI line has also fallen below the oversold zone. Let's enter a trade with a 1-to risk-reward ratio again. When setting up the trade, we place the stop-loss order above the resistance line where the bull trap occurred. This was another trade that resulted in a perfect profit. Let's also take a look at long position trades and explore some different details. In this example, we see that the price forms a new peak after a downtrend, reversing the selling pressure in the market and entering a new phase. It is wrong to think that the market maker, who supported the broken trend for a long time, will immediately withdraw from the market in such trend reversals. This is because the seller group that supported the long-term downtrend may continue to support the trend for a while by selling, even if the trend is reversing. Therefore, If we think that the general trend in the market has reversed, it is in our best interest to wait for confirmation by drawing another intermediate resistance line after the CHOCH action. The intermediate resistance line we drew as confirmation of the trend reversal has now been broken with strong upward buying pressure. The RSI line is also above the overbought zone, which further confirms the buying pressure. This level seems to be a good entry point for a long position. The stop-loss order can be placed below the lower level below the intermediate resistance line we drew, or it can be placed below the dip level below the CHOCH level, as shown on the screen. The choice here should be made based on the trader's own risk management. R1. 2 trade reached its target. If we had placed the stop-loss order one level higher, it would have still reached its target. I wanted to remind you of the options, just in case. And let's take a quick look at how a character change in the market is formed with a very clear example. In this way, we can strengthen the foundation of every strategy we want to apply in our trading. Please note that the probability of making a trade that you want to do by just looking at the indicators is low because the indicators try to help you based on past price movements but can never predict the future. We see a very clear and long-term downtrend on the screen. Pay attention to the point where the trend line is broken. First, the price starts to make higher lows before the falling trend line is broken. After that, it closes by violating the trend line upward. Even though the falling trend line has been broken at the point I have marked, the price is making the expected retracement movement deeper. At this point, small investors who rush into the market with a buy position at the first break are caught in liquidation hunting. The market character change is evident with the first break. As I mentioned at the beginning of the video, the deep retracement occurred as a result of liquidation hunting by the seller group that had been supporting the downtrend. And then we see that the price has also passed the intermediate resistance line we drew at a higher level upwards. At the same time, the RSI line is also above the black area, confirming the buying pressure in the market. With all the criteria met, a trade can be opened at the closing level of the bull candle bar that is above the resistance line. Even if we place a stop-loss order at the lowest level after opening the trade, we can see that the maximum risk is 5.77% and the profit level reaches up to 11.37%. Of course, as I promised you on this channel, I need to be clear that I will never sell dreams. Even if you couldn't achieve a profit target of 11.37% in such a trade, if you had set up a fixed trade with a minimum risk-reward ratio of 1.5, you could still make a profit of 7% or 8%. The important thing is that your trading strategy is strong and you stick to the rules of your strategy. See you in the next training video.